Hey James, I have been thinking a lot about how to better manage my money lately. I feel like I am not really making the most of what I earn. Do you have any thoughts on where to start with personal finance?
Definitely, Anna. It's great you are thinking about this. A good starting point is to look at your budget. Do you currently track your income and expenses?
I sort of do, but not very systematically. I check my bank statements, but I have not really set a strict budget.
That's a common starting point. Maybe try a more structured approach? There are apps that can help with this, like Mint or Anab. You need a budget. They can give you a clearer picture of where your money goes each month.
That sounds useful. And what about saving? I know I need to save more, but it's tough to know how much I should be putting aside.
A good rule of thumb is the 50/30/20 rule. Spend 50% of your income on necessities, 30% on wants, and save 20%. Adjusting those percentages based on your personal goals and financial situation can also work.
I like that guideline. Now, what about investing? I have heard it's important, but it seems so complex.
Investing can definitely seem daunting at first. The key is starting simple. Many people begin with a retirement account like a 401k if their employer offers one, especially if there's a match program.
I have a 401k, but I'm not maxing it out. Should I be?
It's a great idea to contribute enough to get any employer match. That's essentially free money. Beyond that, maxing out your 401k is a solid goal, but it also depends on your other financial commitments and goals.
Got it. And what about other types of investments? I hear a lot about the stock market and real estate.
Diversification is key in investing. Stocks are a common choice. If you are new, you might start with mutual funds or ETFs, which bundle many stocks together. That way, you are not putting all your eggs in one basket. As for real estate, it's another good option, though typically more capital intensive and less liquid than stocks. Exactly, they are managed by professionals and they track a specific index or sector of the market. You just buy shares of the ETF, and you own a slice of all its investments. It's an easy way to get broad exposure without having to pick individual stocks. Exactly, they are managed by professionals and they track a specific index or sector of the market. You just buy shares of the ETF, and you own a slice of all its investments. It's an easy way to get broad exposure without having to pick individual stocks.
Sounds like a good fit for someone like me who's just starting out. And are these options generally safe? I am a bit risk-averse.
All investments carry some risk, but historically, investing in a diversified portfolio of stocks via mutual funds or ETFs has been a reliable way to grow wealth over the long term. It's important to tailor your investments to your own risk tolerance and time horizon.
That makes sense. I will need to do some more research and maybe start small. Any resources you recommend for learning more?
Definitely. Websites like Investopedia are great for basic and detailed explanations of financial concepts and investment options. For a more personal touch, podcasts like The Dave Ramsey Show or So Money with Farnoosh Torabi can offer some practical advice and inspiring money stories.
Thanks, James. This really helps. I feel less intimidated about all this now that I have a clearer starting point and some resources.
Anytime, Anna. Remember, the most important part is to get started and learn as you go. You will adjust and refine your strategy over time.
Actually, that brings up another question. What if I make a mistake? I am worried about losing money.
That's a very valid concern. It's almost certain that you will make some mistakes along the way, everyone does. The key is to start with what you can afford to lose and increase your investments as you gain more confidence and understanding. Also, consider long-term investments, which can help smooth out the ups and downs of the market.
So, staying the course despite market fluctuations is important.
Exactly. It's all about the long game. If your investments dip temporarily, it does not necessarily mean you made a bad decision. Markets go up and down, but historically, they grow over time. That's why it's important to keep an eye on your investments but not to panic with every dip.
That's reassuring. How often do you think I should check my investments?
It's good to keep informed, but obsessing over daily fluctuations can be more stressful than helpful. Maybe start by checking quarterly. That's often enough to stay informed and make adjustments if necessary, but not so often that you react to normal market volatility.
Got it. And about making adjustments, how do I know when it's necessary?
Great question. You might consider adjusting your investments if there are big changes in your life, like a new job, buying a house, or planning for a family. Also, it's good to revisit your portfolio if there's a significant change in the market or economic outlook.
Makes sense. Seems like a balance between being informed and not getting overwhelmed.
Precisely. It's all about setting a plan that aligns with your goals and comfort level, then adjusting as needed without making hasty decisions.
This all seems much more manageable now. Thanks for breaking it down for me, James.
Of course. I'm glad to help. And remember, there are professionals like financial advisors who can offer personalized advice as you grow your investments and as your financial situation becomes more complex.
I might look into that once I have a better handle on things. For now, I think I will start with setting a clearer budget and exploring some simple investment options.
Sounds like a solid plan. Let me know how it goes, or if you have more questions down the line.
Actually, there's one more thing. With all these investments, how do I handle taxes? I am not really familiar with how that works.
That's an important aspect to consider. Different types of investments are taxed differently. For example, dividends from stocks and capital gains from selling investments at a profit have their own tax implications.
That sounds complicated. How do people usually manage that?
Many people use tax software when they file their taxes, which can help guide you through reporting your investment income. If you have more complex situations, like frequent trades or multiple types of investments, it might be worth consulting with a tax professional.
I guess that's part of learning to manage investments properly, huh?
Exactly. It's part of the whole financial picture. Also, there are tax-advantaged accounts like Roth IRAs and traditional IRAs that can help you manage the tax impact of your investments better.
Can you explain a bit more about those?
Sure. With a Roth IRA, you contribute money that's already been taxed, but your money grows tax-free, and you don't pay taxes on withdrawals in retirement. With a traditional IRA, you get a tax deduction on your contributions now, but you will pay taxes when you withdraw the money in retirement.
I see. So the choice depends on when you want to handle the taxes.
Right, it's about whether you think your tax rate will be higher now or in retirement. It's one of the many strategic decisions involved in planning your investments.
It seems like there's a lot to consider, but also a lot of opportunities to optimize things.
Absolutely, and as you get more comfortable, you will start to see how these decisions can be tailored to your personal financial goals and situation.
Thanks for all the info, James. I think I have a good starting point now. Plus, it feels like there's a lot of room to grow and learn.
That's the spirit. Just dive in, get your feet wet with the basics, and build from there. I'm always here if you need to bounce ideas around or ask questions.
I really appreciate it, James. Let's definitely keep this conversation going as I start getting into it.
Looking forward to it, Anna. You are taking a big step toward securing your financial future, and that's something to be excited about.
I am excited, and a bit nervous. But mostly excited.
That's the perfect place to be. Use that excitement to fuel your journey. Happy investing, Anna.
Thanks, James. Talk soon.